Welcome to the Killer Innovation Show, the longest continuously produced podcast in history. Each week, Phil McKinney brings you the insights and strategies to amplify your creativity and innovation skills. Here's your host, Phil McKinney.
With any innovation, one of the key elements that you have to have is risk capital, the ability to raise capital to take that idea and make it real. Today's guest, Bryan Chambers, is from Capital Factory, which has two sides of their operation. They have the venture side, which Bryan is part of, and then you have the other side, which is advisory consulting work to startups, helping startups kind of get themselves in the best possible position to be successful and also to raise capital. So Bryan comes and he will be sharing with us kind of how Capital Factory works, what they're seeing here in the Texas market. They covered the entire state of Texas with their programs and their venture investments. They write a lot of checks for early stage startups. The other guest we have on today's show is Joel Radtke. Joel is with Collateral Edge. They're kind of pseudo stealth mode, getting ready to come out of stealth mode at the time of this recording. They are a FinTech, finance technology company. They're looking at how to change the model for medium and small size companies to be able to go to a bank and take debt financing to fund growth, to fund expansion. Many medium and small size companies struggle with doing that because they don't have a long enough work history, not enough equipment, buildings, and all to post as collateral. That is what they're focused on. And there's a lot of excitement with medium and smaller banks around Collateral Edge. So by the time this show comes out, you should probably be hearing more about them. But throughout the end of this calendar year, trust me, you are going to hear about Collateral Edge. So again, today's guest, Bryan Chambers, Capital Factory, Joel Radtke, Collateral Edge. And you want to listen to the very end. Some great insights, particularly if you are at that stage where you're looking for and potentially wanting to raise that initial seed round of funding to take your idea and make it real. Before we jump into today's episode, got a favor to ask: like, share, and follow. Like this episode so people see it. Share it. If you have people specifically you know who could benefit from the content of today's show, share it with them. And follow us on social media: Facebook, LinkedIn, Instagram. Pretty much anywhere you will find the show Killer Innovations. And you'll also find me personally, Phil McKinney, all one word, no space. And you'll find me pretty much on all those social media platforms. So check that out. And that way you stay up on the latest information. And particularly if we're traveling around the country, you never know. We might be coming to your part, your neck of the woods, and maybe we can even meet up. So follow us and see where we're going to be next. And with that, let's jump into this next episode of Killer Innovations. So Bryan, here in the Richardson, Dallas, Fort Worth area, you are part of Capital Factory. And through this week and a bunch of the other interviews, we talk about the importance of risk capital to really encouraging entrepreneurs to step out, take that idea and make it real. Give us a little bit of context about Capital Factory and what you've been up to.
Sure, thanks. So Capital Factory is really a very unique organization. I don't get to point to too many other organizations and draw from examples. Capital Factory was started by Joshua Bear in 2009 in the middle of Austin, Texas. Since then, Capital Factory has really become the center of gravity for entrepreneurs in Texas. We've got boots on the ground and offices across Dallas, Austin, Houston, San Antonio, and we are relentlessly focused on helping entrepreneurs by connecting them to their next investors, their next customers, talent. And since 2010, we've been the most active early stage investor in Texas. We write a lot of checks, Phil. We write checks at this pace once a week, sometimes twice a week. And so we're really, really busy. We've been doing that for a number of years. You notice a lot of trends over that amount of time and over writing a lot of checks. So and really in 2017, we recognized something and published an investment thesis, which happens to be very geographically focused. That investment thesis we call the Texas Startup Manifesto. And in a nutshell, what it says is that Texas is really geographically unique. We happen to have 5 of the top 12 largest cities in the whole country, between Fort Worth, between Dallas, Austin, Houston, San Antonio. Those 5 cities, ironically, they make a triangle. We call it the Texas Triangle now. But not only are they the 5 largest cities, 5 of the most 5 of the top 12 largest cities in the country, they also happen to be the fastest growing cities in the country. And that's particularly unique. Each one of these cities is unique with its own distinctions. They all have their own core competencies and competitive advantages, and they're incredibly different than each other. They're all on top of each other. And the Texas Startup Manifesto is about erasing boundaries in Texas and getting investors, getting founders, getting angel investors, getting corporations to treat this region like one single city, get the resources to move between this region. And when those resources move, it really unlocks an incredible amount of potential and opportunity for various stakeholders in the innovation ecosystem. That is, so that's what we're focused on.
So here in Texas and other parts of the regional efforts that we see around the country, a lot of the investors, you say you write a lot of early stage, but you're also the connector to bring in other investors. Are most of those investors Texas-based, or are you having success in being able to pull in investors from outside of the region?
Yeah, I think the gravity of Texas is undeniable. It is real. I've watched incredibly prolific investors stand in our conference rooms in Austin or in Dallas and say that they'll never put an office in Texas. And 1 year later, they might be living here, or they have an office here now, or they're hiring scouts here now. There was this moment a couple of short months ago, as summer was kicking off. I remember I'm sitting in Austin, Texas, at Joshua Bear's house on his patio. There's lots of investors. I'll refrain from sharing exactly who's on that list, but pretty iconic, well-known investors from Silicon Valley, or recently moved to Texas from Silicon Valley. And we used to do this exercise or have this initiative where we would load a plane. We would put a lot of our portfolio companies on that plane. We would send that plane to Silicon Valley. We'd partner with Silicon Valley Bank, Wilson Sonsini, and a bunch of other great organizations. And we would set up road shows for all of our portfolio companies. They would take, multiple days of just meeting after meeting after meeting after meeting, in hopes to, raise some money. And we used to do multi-day road shows, but they were always to Silicon Valley. They were LA, Silicon Valley, up to Seattle. They were Boston, New York, sometimes Atlanta. And one of the investors asked us, said, "Bryan, Josh, when are you, looks like we've got line of sight. COVID's simmering down. When are you guys coming back to Silicon Valley?" And it was a magical moment because everybody kind of just stopped and looked, and there's 12 people sitting around the dinner table, and Josh and I kind of looked at each other, and we were like, "Why would we do that? Why? We're not planning on it. We don't really think we would do that again." And everybody just, you could feel it. It became such a big elephant in the room. I think it's already well known, but that was a moment we all just recognized and go, "Oh my gosh, like, who's going to tweet about this?" Like,
Right.
but it was, yes, people are leaning into Texas. But it's not just Texas. Look, this is, thanks to a lot of people, Steve Case, rise of the rest. It's now a verb I think everybody uses. This is about the rise of the rest. It's about the resources, and the technological capabilities, building virtual teams and virtual and remote working teams, and the tech stacks that really empower that have enabled everybody to build fantastic organizations. Talent is right here in our backyard. There's lots of amazing schools like UT Dallas and UT and Rice, Texas A&M, that are producing incredible engineers here in Texas, and everything is growing. So we're really excited about it. People are leaning in. It's not just investors that are leaning in; corporations are leaning in, the government is leaning in, the military is leaning in, and dollars are flowing unlike we've ever seen before. I think it was pretty unheard of, or it was certainly a pretty big headline in 2017 if somebody raised a $5 million Series A round. It seems like I can't even, every week one of our portfolio companies is raising a $50 million round. It's changed completely.
Right. Right. I want to bring in Joel here. Joel Radtke, you're with Collateral Edge. You actually are one of the portfolio companies for Capital Factory,
Yes,
right?
that's right. And they're a key advisor for us as well.
Okay. So give us a little context on Collateral Edge. I've read the background on it, but share a little bit about your history and how you got to where you're at today.
Sure. So Collateral Edge is a FinTech company, and we've created a soup to nuts model sold into the bank market to enable them to engineer more loans in a risk mitigated fashion, keep loans within the regulated environment versus going outside the environment, and ultimately lower the cost of debt capital to borrowers. So my background, I've been in finance for 25 years, investment banking and private equity, and I co-founded a company before as CFO. So I've seen the debt capital transaction from all sides. And the issue, clearly a lot of innovative companies get started, venture founder money, angel money. But at some point, you need cheaper capital now that you have the business model laid out and working, and there's a profitability structure in place to push that forward to achieve whatever ultimately what the company, the destiny or a bigger version of it. And so many companies in the middle market and lower middle market get tripped up there. It is not easy to get through a bank's process and to clear the 45 hurdles that make you appropriate for a bank, because let's face it, the banks in this country are ultimately backed by us, right? We're the source of last loss. And so properly, they make it very difficult to get through their system. They're not designed to take some losses and charge interest on the rest to make it all work. They're really designed to try to take no losses. And the problem is for middle market companies that have nice cash flow streams, et cetera, there's still credit risks everywhere.
Right.
There's customer concentration. There's generally not a long operating history through multiple recessions. There's always reasons why that company has some credit risks that when they get all the way through the system are places where they fall out and get denied. What we've created is a way for that not to be the end of the story where the borrower then has to go elsewhere to either very expensive capital or go without growth opportunity. And the flip side is for a bank to lose what could be a good customer in the community to help them grow and pay fees and expand. We give them a way to mitigate that risk, provide the gap that was preventing the loan from getting closed, all behind the scenes, all do it in a way that protects the institution. And then we are using our FinTech solution, pricing algorithms, et cetera, slicing up the tiny pieces of risk that was the key cog in getting that deal done, aggregating them behind the system, and then financing that as a whole in a much cheaper fashion.
Oh, wow. Okay.
So it's a mix of a lot of different things. It's a mix of technology. It's a mix of a financing company. It's a mix of the sort of evangelical sale to a very conservative environment in banks. Banks
Right.
aren't used to being on the leading edge of doing something new.
So you're pre-revenue. So the question is, who's the target customer? Are these large banks, or are these kind of the small middle market banks?
Mid-market banks. So
Okay.
between $1 billion and $20 billion in asset size.
Okay.
So they're not your one location on a corner just doing mortgages and car
Right.
loan banks, but it's also not
it's
Chase.
not B of A, Chase, or
Right.
Wells Fargo.
These are, and it's funny, playing on Brian's comments about Dallas. One of the ways you make inroads with an innovative concept in a conservative end customer industry is by having an environment that's active and competitive. So when we're talking to bank customers, there's no real geographic limitations to our solution, but it just so turns out our first few customers that we've signed up and that will be the first revenue have major Texas operations or are based entirely in Texas. And you hear the same stories. It is brutal out there. When we see good companies that we'd like to bring in, there are 40 other bankers, and money's a commodity. And they show up at the same
and interest rates make capital almost darn near free right now.
And so they need an angle.
Right.
They need a hook. And so we're part of why I think we've generated a lot of excitement in that business is we provide them a way that they can say yes to a borrower and win a piece of business they otherwise would have lost.
Well, at the beginning you mentioned also about they have an opportunity to get a customer that also is thankful they can get the funding and therefore create a very loyal type of a customer that lasts beyond. Give me that first deal, work with me, make me successful, and that loyalty returns then.
Think about this, Phil. Something a lot of people can relate to. You want to buy a house. The mortgage is part of getting that, but the emotional appeal, the customer, what you're focused on is that house, what it's going to be like to live in the house. The business owner is focused on what their business is all about, expanding it, the passion of that. And this loan, this bank interaction is a key part of that. But today, and a lot of times, the entrepreneur is frustrated with that. The loan officer doesn't come through. It's they're pitched, we can get you $10 million, but it turns out to only be $7 million. And sorry, I couldn't get it through. It's a negative experience. Right. But the reality is, that banker, especially a mid-market banker, they're not in some office 1,000 miles away. They're in the community. We provide them a way for them to be the hero, right? Get in the frame where your borrower said, my banker came through for me and made all this happen. How often does that happen?
Well, but it happens in a lot of other industries. We were talking before the show started about, you were just talking about Steve Case, right? And so, Steve's doing these $100,000 investments around. He doesn't own his bus; he rents his bus. I own the bus. But Steve, the guy who runs Steve's venture arm, has been on the show. We've been talking. I've known Steve from way back, because when AOL was first started, before it even was called AOL, at HP, we gave Steve his first server to put the AOL system up on.
Wow. And
it was a loan that we somehow forgot that we had loaned him a piece of equipment. And you know something? At AOL, when AOL got huge, only had HP equipment in the entire infrastructure. Those kinds of just work with somebody, make the bet, build that loyalty, it has huge value downstream.
There's no question. You remember somebody who took a chance.
Takes a chance. We want to take the risk. Well, it's organizations like Capital Factory, right? The fact that they make the connection, they help you raise your money. The next company you start up, you tend to get this kind of recycle effect back into the funding source because they took the risk on you, even if it blows. This is the thing that people get shocked about. Even if it blows up, you still come back to that same. The same circle of people who believed in you, who are willing to take the risk. So, a question I've got for you, Bryan, is why take the risk on the collateral edge? What was it about that deal that was interesting?
Yeah, this one was easy. It was strictly the people, and that's where it started. It was one phone call, and it was a yes. And that's really rare. You hear about those stories from time to time. People say, you know what? Oh my gosh, it was one phone call, but it really was. We write a lot of checks. We'll write, 50 to 60, sometimes 70 checks in a year. That doesn't happen a ton.
Right.
So it was really pretty unique. In this particular scenario, we knew Joel's partner really, really well, Joe Beard. Who's been a great friend, and got to ride side saddle with him as he ran the Bro Jane venture fund. We wrote some checks together. We were in the trenches together. We learned some We started some initiatives together, got on a board or two together, and really developed a great working relationship and the utmost trust and respect for each other, and really understood Joe's superpowers. When Joel entered the picture, it only got better, and so it was very easy for us to know these are really experienced operators. They understand how to steward and manage investor capital very well. There's already really great indicators and really great people involved. This was a no-brainer for us. We were waiting for the opportunity to back Joe and Joel. So it was a very easy decision for us. I think part of it might have even just been done over text message. Candidly, it was an easy decision for us because of the people.
So one of the questions I get a lot, right, is someone comes up with a great idea, right? How do they get plugged into a network like you have? That because they don't have the relationship with you. They're just two guys and a dog starting some new crazy idea.
Mm-hmm.
What's your advice to the underconnected, under-networked kind of innovator out there who's got a start of an idea?
Yeah, it's a great question. I have two pieces of advice. One of them is, look, and not every ecosystem or metropolitan area is created equal. We certainly know that. But regardless of where you are, I can assure you, if you're in, a top 50 major metro, I mean, there is a startup community. You have to seek it out. You have to be intentional about it. And look, that may sound easy. It's not that easy, because you have to show up, and sometimes showing up is the hard part. And so there's no replacement for showing up and participating in the startup ecosystem or in the innovation ecosystem. That's step one. Step two is work for somebody else first. I think building a great startup is really an apprenticeship. It's incredibly hard to do. And there's just not a lot of ways to gain the perspective and the understanding and the scale of what it actually takes, the intensity of what a founder goes through day in, day out, 24 hours a day, the difficulties of managing a cap table, managing investors, the uncomfortable scale, how uncomfortable it is to burn money, and scale a company. You think you know what scale is until you work for somebody else who scales a company. And so that's the number one thing I could recommend is work closely for somebody else as they do it with their startup. Ride saddle, ride shotgun, whatever you got to do to get a lens into it, and it will create so much perspective, and that value that somebody walks away with will prepare them so much to start a business. In fact, I think if they do that for 2 years, their perspective, what it means to build a venture-backed startup, is just changed night and day. So it's an apprenticeship. Get trained by somebody else, learn from their mistakes, and get prepared to do it.
Yeah, I remind people that I did 13 startups before I got my first IPO. Man, you go through that round a few times. Bunch of them got acquired, 2 blew up, right? But boy, you get a blow up, and you go through that experience, you will do anything in your human power to avoid ever going through that experience again. But it's a learning process. I think that advice is excellent from the standpoint of, it is an apprenticeship. You learn a lot in the process, and you got to be willing to make that investment to learn, rather than just saying, "Oh, I got this really great idea, write me big checks."
Yeah, I did. I could talk for hours on this particular topic. Everybody has ideas, right? You wake up and you have an idea in the shower. There are always dumb ideas in the first conception. Joe and I came up with the idea for Collateral Edge 8 years ago. We did, and frankly, on the napkin or the piece of paper, there were the big blocks of the elements that made sense. But if we would have immediately taken that piece of paper, same guys that they trusted, and went to Bryan and said, we need money for this is going to change the world. In the first 15 questions, we would have had 12 of them not great answers, or hadn't thought it through yet. And that's probably what Brian's talking about, why that first phone call doesn't lead to investment most of the time, because they've gone too fast from the aha moment to the I need money and I'm going to make a company.
Right.
So what that's failing to plan. You're going to war in a startup with a big idea. It's, the mountain's there. It's not getting smaller. It's not moving.
Well, this gets past the fallacy because everybody thinks all the value's in the idea. It's not. The value's in the execution. That everybody worry about. Oh, I got a patent. It isn't. The patent's not going to protect you. Your ability to execute and to scale is where you create the value and the competitive advantage.
You find it is a bit of a chain reaction. It's not the energy that you put into the system to the people as excited about it as you are, both in the potential customers, potential partners, potential investors, potential all around. At some point, that starts working in your favor. You get the right advisors on your team. You get the right investors, so the next investors look and say, well, these guys are involved. That's a positive indicator of they're likely to have access to further capital and success. And you get the next ones involved that are, as valuable. And then all of a sudden you have a customer that looks and says, well, your investor base is A+, and this sounds like something I would be involved with. If I was trying to sell something to HP, I could run around for a year, take everybody to give 1,000 PowerPoint presentations, wrap that all up a ball and put it on the side and say, well, Google's doing it. What do you think? That's worth every part of that.
In Collateral Edge's specific case, I mean, my gosh, Joe must have withheld the idea, the concept, and the opportunity for a year from me in stealth mode while you guys were, when this became an idea and you guys began to start operationalizing on it. I remember how patient and how diligent y'all were with just doing some blocking and tackling. A lot of people don't know until you've been through it a couple of times. There's an entire period that occurs before you start a fundraising. It's a pre-fundraising campaign. It's a pre-fundraising process. You have to cultivate, you have to steward, you have to work through the challenges and the objections and understand how to how to pitch this, how to build some of those key relationships. And when people know you're that serious about your process, it amplifies the opportunity. It excites us a little bit more. The first conversation, I mean, it can happen, and it does happen from time to time. Usually not in lead investor positions, usually in more follow-on investor positions. But when the first time you're meeting someone, you shouldn't be asking for money. That is not the approach I recommend. The approach is to build a relationship with somebody, establish trust with somebody, give them an opportunity and a lens to see what somebody is doing, that they're going to just do what they say they're going to do over a 3-month, over a 6-month period. So we over a year-long period, that is a pre-fundraising period. Treat them like they already are your investor and give them that access into and the lens into how you operate as a human, as an individual, as a business person. So we in Collateral Edge's case, we had a lot of that data just because of our operating history with the founders. But I remember, and I knew how serious Joe took it. Like, hey, I'm doing something really, really big, and I'm very close to Joe, and I respected that process. Like, and he had a lot of other things going on that he needed to wind down some other affairs and create the successful transition, and it was it was well executed, and that's what we expect and know that great entrepreneur.
So Joel, given where you're at today, what's next?
Oh, it's you talk about stealth mode, but we're still half in stealth mode. That's about to end. Okay. I mean, we haven't done our first release on the round. We haven't done PR. We've signed up 2 banks. Nobody knows that. We've got 5 other banks in vendor review. Nobody knows that. We've signed up our back-end financing partner. So, we're in the you don't plan to fail, you fail to plan.
Right.
You cannot skip a step. We want to put all of the dominoes in place so that when we have that HP Google conversation, it's not calling 100 banks and hemming and hawing around when they say, well, who else are you doing it for? It's 5 logos on a page. And by the way, we can't get you in this year because we don't have capacity. Would you like to be in Q1? Because if not, it's likely later in 22. Oh, that's what we're talking about here. And I don't know, that's
so this you just wrapped up your what, C round?
Seed. Yeah.
Seed. Okay. What is the total round of your seed round?
3.5.
3.5. Okay, wow. So it's a meaningful seed round.
We have a meaningful opportunity.
Yeah.
We have, even in our internal projection, it's the market we're in. It's the enterprise market. A mid-sized bank in our target segment should do $50 to $60 million of our product a year without changing their practices and using it competitively. They look at it and use it competitively, that number goes up.
Right. So the rest of 21 is still somewhat stealth mode, and 22 kind of coming out.
No, we'll start releasing some. We have a big kind of investor conference that'll have PR in November. Mm-hmm. We'll releases on the round, our backing, our initial customers. We're talking about pre-revenue, but not for long. Our model is sort of instant revenue per transaction. So
right.
we will have revenue here. There's 2 weeks left in Q3, but it'll be close.
Right.
Definite in Q4 and a ramping into the future.
Great. Well, great. And who was in your seed round? Can you share that?
This is, among. I'm obviously not gonna share those details. That's for Joel and Joe to share. But man, you guys put an impressive cap table together in this part of town, this part of the state, part of the country. I mean, my goodness, it's one of the most impressive cap tables I've seen for a pre-seed or seed stage company pull together in this town.
It was intentional.
Yeah,
we have a lot of great Texas investors, but we have Silicon Valley investors who've grown multi-billion-dollar public companies. We have New York investors with massive capital pools.
Oh man!
So everything we've done in this, rightly or wrongly, has been intentional.
Right.
It's with our market. We targeted investors that could either help with the technology side of what we're doing, or the capital side, or bank relationships.
Well, it's the old adage of smart money is always better.
And to Joe's credit, he was given advice by some of his mentors, which is there's a lot of people that will write a check.
Yeah.
It matters to you who's writing that check.
Yeah.
Period. Full. And
it's not the dollars.
And it is hard to convince a first time entrepreneur of that is just like, oh,
hungry for dollars. Give me the check.
I see the payroll or I see whatever. I'll take it from anybody with a pulse. But once you go down the wrong road with that, it is very hard to get back on the right road, because people don't want to associate with investors who are in the cap table that they don't respect or think are additive.
Right.
Or even worse, you can have investors that become problematic, aren't on board for the next stage or see the full vision. And man, that can kill a company.
Yeah, definitely causes a concern amongst the other board members too, right? You get that infighting going on. So as we wrap this up, if people want to follow what you're doing over at Collateral Edge, Joel, where's the best place?
Best is definitely the LinkedIn page for Collateral Edge, COLLATERALEDGE, and it's also collateralaledge.com either way. But we will, I mentioned some of the PR and the releases. There'll be a lot more coming through that site.
Okay. And Bryan, for Capital Factory?
Yeah, a couple of different ways. Josh Bear, he's a pretty popular guy on Twitter. A lot of people can actually get some of the raw and authentic updates daily that way. I share a lot of information on LinkedIn, and I'm very active on LinkedIn and really respond to every legitimate inquiry. So people can follow me and some of the activity that Capital Factory does on LinkedIn. But there's a variety of newsletters that we push out. We're a pretty vibrant, active community across the whole state, and there's lots of different ways to tap into that. But signing up for the newsletter and just starting to see some of that activity, which events are going on in which part of the state, is a great opportunity.
Great. Appreciate it. Thanks for coming and joining us here on the bus, and wish you both the best of luck.
Thanks for having us.
Take care.
So what do you think? I think the insight that Bryan and Joel shared with us with regards to their own direct experiences, but Bryan talking about specifically what they do with regards to Capital Factory, but Joel talking about their own experience at Collateral Edge, gives you both sides of the story. You're not hearing just from the venture side, but also from entrepreneurs trying to raise the money for their successful business. So hopefully you got a lot out of that, and gives you a little bit of insight. Also, I think Bryan's advice, if you're starting out and wanting to raise money, Bryan's advice on getting engaged and showing up to help establish that your local relationship with the startup entrepreneur community, wherever you're at, lays that foundation for your own success. It takes a village. It truly does. You need that local government. You need the risk capital. You need advisors, coaches, mentors, and you have to have those relationships. Other entrepreneurs in your local area can be hugely helpful. So take Bryan's advice, take that to heart, and also Joel's advice on what does it really take to be that entrepreneur, to take your idea and actually bring it to market. Thanks for joining us. We do appreciate you joining and being part of the community. If you want to stay part of the conversation, check out the community. It's theinnovators.community. Theinnovators.community. That's where innovators, creatives, designers are all hanging out, where we help each other with our ideas, improve those ideas, maybe connect them with somebody who can solve certain problems for them, or help raise maybe early stage investors, whatever it might be. So check that out, theinnovators.community. You want to check that out. Give us some feedback on the shows. Also, post a comment wherever you're getting your podcast from, whether that's iTunes, Google, iHeart, Spotify. We're pretty much everywhere. Been around since 2005, so most every place you can get a podcast, including Amazon now. You can actually get the podcast on Amazon. So check that out and let us know. Give us some feedback. Let us know what content, what questions, what topics you would like to have us cover. And with that, we appreciate the time out of your busy schedule, and we will be back soon with another episode of Killer Innovations.
Podcasting nonstop since 2005, this has been the Killer Innovation Show on the Innovators Network.